Good day, everybody. Brian here from quantlabsnet.com. Today is June 23rd. We're going to look at over the situation that happened on Saturday night, my time, New York time, with a Iranian nuclear news story that I'm sure you know, set off by the U.S. And spent a good number of hours on this today, the following Monday. So the world has gone against the U.S. dollar. For whatever reason, it may have recovered, but it did drop quite a bit. So there was a story out that I'm just readjusting to about how people are moving off of the US dollar because of this and are going into the euro. So I thought it'd be interesting to let me just pull up the DXY. Okay, so this is obviously on Yahoo Finance. Excuse me. You can see here, 10 a.m., the US dollar did decline and it's flattened out. So what's happened is a lot of the euro got much stronger, as you'll see here after the story. And, it's gone up almost 0.5%. And basically, what's happened is the story said that most people, currency traders, have dumped the US dollar, the DXY, for the euro. So I've gone in, looked at all the different current contracts. At the beginning, I just wanted to provide Yahoo Finance data for this Python script. Doesn't work. Didn't work at all. It took me, I don't know how many hours to figure that out. But all I can say about Yahoo Finance data, even though it's free, it's useless. Don't try it. Thankfully, I have weeks ago been able to generate real world market data for both futures and options data for from interactive brokers. I've talked about that in past videos. So what we're looking at here is there's three contracts out there for euro future contracts. So this is now combining with the euro and options data, again, real world as of today after the story has come out. So here's the package I'll be making available for my paying members. I'll put out a big email on this. I'll keep this up for a day or so, even beyond a couple of days. I don't think this will be worth a lot of as what it is today because of the situation. It's all based upon timing and whatnot. So this will go into the more expensive membership tier once this is done, just as an example. But this again is done in Streamlit, Python Streamlit, with the Python code for that. But here, in this case, the first time I'm doing this is providing the actual raw files that this script is using to be able to come about with this assessment. So here's the Streamlit application I've talked about. Streamlit's probably my favorite. It always comes back and has more enhanced features I don't even ask for, but this is an example of it. And what I've done here is I've given it the raw data, both the euro and the DXY, asking for a quantitative strategy among all the different data or contracts that are available, and project that data for risk reversal on what the potential is. And it does a very deep analysis here. So here are the three different contracts according to the Interactive Brokers TWS. What I like about this is you see here the different types of available testing. So it does its, and again, the code's all here. Just join my membership. I'll put the description. I'll put it in the description and blast it out in emails as well. You can see here we got Monte Carlo. We've got 95% confidence interval. We've also tested with the ARIMA forecast and using historical data. I've talked about historical data does help. Doesn't mean it's going to be in a situation where it can be forecasted. So here, you could see here where we could forecast out over 7 day all the way up to 60 days. Now that depends upon the raw data itself. I'm not sure how far out it goes, maybe a month at best, but I'll go through that in a minute. But you can see here the ARIMA forecast, which one's going to give us the best price. So here it gives us a summary, forecasted price at 113, forecasted change with a forecasted volatility at 0.2% over the next 30 days. So out of that, with this particular contract, we also see here the Euro futures term structure as well, again on June 23rd at this current time. So we could have contango, implied volatility, uh, strategy recommendation as well, what to do, risk reversal, buy one call premium as well, premium at strategy. So this is the AI suggesting this. So term structure indicates Euro USD appreciation, so on and so forth. Strategy provides upside exposure with minimal initial cost, expected profit, probability of profit 55%, unlimited downside below short put. So this is the current analysis. Again, it's using quantitative techniques as well. And again, source code's available for the next day or so. So the euro US dollar with the DXY options shows a contango term structure with average slope of 0.91%. Traders are bullish on the Euros and against the US dollar over the coming months. That could be over the coming weeks. Things can change so drastically. It's just a really short term forecast here. And the volatility is at 9.93%, which is moderate on the volatility, suggesting a stable market condition, recommending risk reversal designed to capitalize on these market conditions. So, as I said, it took a bit of time to get this working. One example here is in the performance metrics. So, here strategy payoff as well. 55% win ratio, 0.03 for expected return, unlimited downside, which can be risky. Okay, so here's a strategy visualization on the strategy payoff with the options as well. I go over this in a course that I have available on my membership as well. Um, and that's a 5-week course on the futures and options strategy. This is how the high frequency trading shops do it as well. So you can see here we have optimal, we have a long call, a long put with an implementation guide as well. And let's take a look at another contract here as well. So here, market analysis again, it'll be similar to the contract, but you want to be able to pick which one's going to be the most profitable or has the highest profit potential. So again, this is a 30-day forecast, 30-day forecast there. That might be a little far out, but I'll put a week in there as well. 55% probability again, performance metrics right there. Strategy visualization. Okay, so let's take out the last one here, the last contract here, and see if anything's really changed in it. Implied volatility is a little lower on this one. And forecast the price at 115, forecast a change. Let's see how that's done. So risk reversal here again, 55% potential of winning, and so on and so forth. So if I wanted to show you over 60 days, it probably actually it's fixed it. Fancy that, because I could do that over a 60-day forecast. So again, I'm not sure if it's going to change much, to be honest. But you can see here, yeah, it doesn't really look like it's changed a whole lot. But if I have the risk-free rate, which is questionable as well, euro risk-free rate as well, and the volatility can be adjusted on these parameters as well. So not much change here. But if you're interested to see how to look at this code, so let's I'll put again that in the description where to go to get that. So here again over 7-day, let's say a 10-day forecast. It's a little tighter. You can see here the the forecasting kind of drops over 10 days. So let's see how that looks as well. Strategy, same win ratio. Now, I don't know if this actually changes. I'm just doing this on the fly as well. So, something that you can take a look at and ask yourself if it's something you want to check out. Anyways, so that's this. This might be useful for people. Could be valuable just to reverse engineer and learn it. It's just as you can see here, it's a Euro USD DXY option strategies optimizer including the euro exchange as well, not just the retail as well. Anyways, we'll leave it at that. Thanks for watching. Have yourselves a good day. If you want to know more, just go over to my website at quantlabsnet.com and fill out all your info for a free HFT C++ book. Thank you. Bye bye.